Advanced Lesson 5 Short Squeezes. In this lesson, we will look at 4 examples of short squeezes, as well as how to identify, anticipate, and trade them. Squeezes occur when shorts are forced to stop out en masse, buying at the ask with market orders. This leads to a chain reaction, which drives the price higher and higher. First, let's list the key ingredients that make for such a perfect storm. Number 1. Perceived bearish sentiment. When a stock gaps down, many traders form a bias that the stock is weak. We call this crowded shorts. 2. Failure to make new lows or strong support holding. The price holds a level, refuses to go down, or consolidates sideways. 3. Obvious levels where stop orders are waiting to be triggered. When many levels are close by, this can cause a domino effect, which leads to a violent pop. This current chart has all 3: perceived bearishness, failure to make new lows, and many stops waiting above. The current 5-minute candle is opening higher after an extended period of consolidation. Let's see what happens. It made a new 5-minute high. Some stops were triggered in conjunction with new longs. It made a new 15-minute high and broke high of the day. More stops are triggered. Price punched above the 20 EMA on the 1-minute chart with little resistance. Bears are panicking. Some may still be trapped. Momentary pullbacks on the 1-minute chart are great entries to catch the next leg once bulls have confirmed that they are in control. Here comes the next wave of buying as more bulls pile in to squeeze any last stubborn bears. Each pause or pullback is very short-lived. The buying pressure is very strong. And just like that, price squeezed $1 in under 5 minutes. Shorts didn't know what hit them. Example 2. The following chart also has the 3 key ingredients: gap down, failure to make new lows, many obvious areas where stops may be triggered. The stock gapped down 10% and price has lost the VWAP. A downtrend is forming with lower highs, but the low of the day continues to hold. Let's take a look at some areas where current shorts may have placed their stops. Some may exit the trade on a new 5-minute high. Others may wait for a higher high in this area. This also happens to be just above the VWAP. This prior high may also be a resistance point where stop orders are stacked. The current candle looks innocent enough, just a typical pullback, right? Here comes a new 5-minute high. Shortly after, a new 15-minute high is made. Price is closed above the 20 EMA and is testing the 50 SMA and VWAP. We've closed above the VWAP. Many traders would expect the stock this week to reject such significant resistance. The prior highs have been breached. Stops are being triggered as price punches above the VWAP. Look at the size of this 5-minute candle. It did not pause to test or show any signs of struggle. Panic buying sent the stock straight up over 60 cents. Could this be a temporary moment of relief for bears, a false breakout? Let's speed up the price action to see what happens next. Can you smell the blood in the water? The pullback nearly touches VWAP but is merely a false sign of hope. This is the chance to go long. Here comes the next wave of buying as the squeeze continues. There is no sign of relief. When bears exit a short position, they are buying at the ask. This is no different than bulls going long. Note that there were barely any pullbacks as buying pressure exceeds selling pressure. Price nearly touches high of day as the momentum is finally exhausted. Bears didn't know what hit them. This was a $1 pop in under 10 minutes. Example 3. Can you find the 3 components of a short squeeze on this chart? Hint 1. Perceived bearishness. Hint 2. Failure to go lower. Hint 3. Obvious stop areas clustered together. Let's turn our attention to the price action. Close above the VWAP and new 5-minute high. Re-establish of the previous day close, a new 15-minute high, and engulfing. This 1-minute pullback was a great pullback to hop on board. The next wave of buying pressure takes out the high of day and high of pre-market. And that was a $2.50 short squeeze in 10 minutes. Example 4. In this final example, let's apply what we have learned in this lesson. Identify, anticipate, and enter. Find the areas or levels where bears may be stopping out. Look for a good entry once the short squeeze is in progress. Good luck! Wow, price crossed the VWAP and took out key resistance levels very quickly. Did you catch the short squeeze entry on this pullback? In summary, when bears and bulls are both buying simultaneously, the resulting move can be extremely powerful. We call this a short squeeze. More advanced lessons are available in the Bear Bull Traders Education Center.